All right, team. Welcome to my Benzinga Penny Stock Show. This is John with Beginner Trading. How are you all doing today? I see Talitha in chat. For the first 2 or 3 minutes, guys, let's go ahead and call out some stocks while we let everybody get rolling into the stream. I know it takes a few minutes for everybody to get joined up here. And so, yeah, let me know what you guys are looking at today. I see a comment. Love Benzinga so much. Yeah, Benzinga is the realest of trading channels, certainly. Let me get this ready here. And yeah, we'll take some call outs originally. I see BNGO. A few people talking about BNGO. That one's certainly an interesting one. I've been watching this one for a few months now, and I'm waiting for this one to kind of break out of that downward trend. But what I really like with BNGO is this daily chart. What a pretty daily chart if you're a swing trader. It's pulling back to major confirmed levels at $9 and $9.50. And overall, I've been watching BNGO certainly with interest over the last 2 or 3 weeks. I see some ZOMs there. Yeah, so let us know some stocks in the chat as we get started. Interesting day so far. I think the one everybody's talking about so far, especially in the penny stock world, is AMC with the craziness. You know, I tried to day trade this one earlier, and, you know, big wimpy me got scared out of this thing before it rebounded and started going crazy. I know we had a lot of to the mooners talking about this one as well. And so I'm curious to see, genuinely curious to see where AMC heads this afternoon and maybe tomorrow. I know there's been a lot of talk about the gamma squeeze going on with AMC, and yeah, it's just about whether you believe in it or not, and we will see. Only time will tell. 9 is the bottom. Yeah, for BNGO, I certainly think 9 is the bottom, or maybe you're talking about AMC. They're both right around the same level. But now that we kind of let some people, what's up, Tom? Hey, nice, man. Welcome. But now that we got some people joined here, let's go ahead and look at a few. The first thing I'm really going to do here, team, is we're going to look at a few strategies. And I think, you know, a lot of the people on Benzinga, they're used to the mid and high cap strategies. I know that's kind of what Benzinga has historically focused on. But now that they're moving into the penny stock space, I did want to go over a few easy strategies so you can understand the differences in approaching penny stocks relative to mid and high caps. There's some really obvious and necessary differences in penny stocks aside from, you know, mid and high caps. And that's really what I wanted to go over today initially in the beginning of this stream, so you can get a good understanding on not only the penny stock strategies that I specifically use, but also kind of how you build your own strategies and systems in penny stocks and what you have to target and exploit that's a little bit different in mid and high caps. And so the first stock I want us to take a look at today is ECOR. I'm sure if you traded penny stocks today, I'm sure you saw ECOR. It had a catalyst that came out today. The catalyst initially for this one was that Electrocore, which is ECOR, is trading higher after the company announced an exclusive distribution agreement with Metastar following regulatory approval in Australia. From my understanding, ECOR is some type of nerve stimulator for your headaches. So it basically is a nerve stimulator that obtained regulatory approval in Australia. And so I'm a headache sufferer myself, and I'm curious, genuinely curious to see whether that would work on me. But looking into the actual start here, this is the type of strategies that I specifically target. The first thing you want to understand with ECOR is that with this specific strategy, we need to know where exactly the VWAP is relative to the stock currently. The VWAP is extremely important because with mid and high caps or with lower volume stocks, you're going to look at the VWAP to determine, you know, a short-term intraday trend. If a stock's maintaining above it, it's in a bullish intraday trend. And if it's maintaining below it, it's in a downward intraday trend. And that's basically the same thing with penny stocks. But like I said earlier, there's some subtle differences that you need to understand. The major one being is that a lot of the time with penny stocks, it's just a big run up and then a fail. You know, a big run up and then a fail. And that's why we target momentum with these specific strategies. But the first thing I want you to understand if we're looking at these gapping penny stocks is that a lot of these gaps are going to fail. Most of them are not going to succeed, at least short term. They may rebound and continue up long term. But in penny stock land, most of these gaps will fail. And so what we look for is we look for small slivers of momentum that we can attack on a very short-term basis. At least this is the way I trade. And so when we have a gapper with a catalyst like ECOR, we're looking for small slivers of momentum that we can approach and attack. And most of the time, what I'm specifically looking for is extension either below the VWAP or above it. The main thing is I do not want the VWAP to be middle range with these strategies. The reason for that, and the reason the VWAP is so significant, is because a lot of the time the VWAP is going to act as a resistance level. And so if the VWAP's right above us, a lot of the time the stock is just going to get rejected right there at the VWAP. And I think the reason for that is because a lot of traders actually use it as a reward target. You know, they want to sell before they get to the VWAP. Maybe they'll add again over the VWAP, but initially they just want to treat it as a reward target. And that's similar to what we're doing here. And so you can see for ECOR, if we zoom in here, you can see that at the opening bell, there is some extension away from the VWAP here. You can see we do have some extension away from this. It's not opening up right around the VWAP. You know, it's not middle range. The VWAP's not right on top of it, but we actually have some extension away from the VWAP that you can see. And this makes it a really easy trade to attack because it gives us a really obvious and self-evident reward target. This reward target's really easy to see. It's very obvious, and a lot of other traders see that too, which is probably why it works so well as a reward target. And so what we're looking for here is a change in sentiment. I'm looking for an opening weakness initially at the opening bell. I want to see the stock actually dropping a little bit at the opening bell, or at least have some extension away from the VWAP. And then what I'm targeting is a red to green move. And so if you trade mid and high caps, at least day trading them, you probably know what a red to green move is. And if you don't, I can go over that really quickly. But initially we get a drop at the opening bell. We get opening weakness. Then on this reversal, we get a break over the previous high. And you can see that previous high right around here, I guess, at this 285 level, we'll say, just to keep it simple. And so once we get a reversal and a break over that previous high, we have this small pullback that we can dip buy into. And so this is where I usually choose to enter. And I believe this is exactly what I did today with ECOR, is that I'm trying to enter on these small pullbacks, testing that opening range high right here. And then after that, the trade gets extremely simple. The risk level is going to be subjective. You know, you can give your risk level somewhere underneath this, maybe at a confirmed $0.25 level like 275. Keep it really easy. And so if this is our risk at 275, and we can give ourselves the VWAP as a reward target. And so it's a good risk reward trade that is really obvious. And again, regardless of whether this breaks over or under the VWAP, we can just ride this pullback up to the VWAP level and exit the position. One of the most important things, guys, if we're trading these type of strategies, these are penny stocks. A lot of the time you have big rips in momentum and then quiet fades back down on the backside. Big rips in momentum, quiet fades. And that's what we get a ton of the time. And so if you're trading these strategies, you know, you can trade them longer term, but I believe you need to have an underlying sense of skepticism as you're approaching these trades, because if you don't, a lot of these are going to fade back down. A lot of these are going to pull all day faders. But if you approach it like this, where you just target this little sliver of momentum, taking advantage of the stock dropping and then breaking over that previous high, then again, it could just be a really easy trade to attack. It's really good with risk reward, organic risk reward, and it happens pretty consistently in the market. Again, I see this happen at least 5 to 6 times per day, usually after I build a watch list each morning. I trade these strategies live every day on stream, so my viewers see me trade this same type of strategy over and over and over again. And again, it's the same thing with ECOR. Another strategy that we can go over here that is very similar to this is one from SOS this morning. Now, if you guys know SOS, I believe this is a mining stock. I'm not 100% sure, but I'm pretty confident this is a mining stock. Yeah, the meme stocks. I see you, Todd. But I'm pretty sure this is a Bitcoin mining stock. And again, I wanted to show you guys this example of that same strategy as well. So you can see, like, look, I am not targeting this one. If the VWAP's right above it here, I'm not targeting. But this one actually is extended on the upside of the VWAP. And so we have a very similar move. We have a drop, and you can see the VWAP even acted as a support level to a certain extent there. And we get a reversal, a break of this previous high. Here's the previous high right here at 610. And then the same type of pullback strategy. We have this pullback here to the $6 level, and I'm entering on these pullbacks. The other good thing about this specific example is that not only is the pullback to that previous high, which is right here, but the pullback is also to the VWAP level. And with technical trading, and technical analysis as a whole, the more levels and, the more levels and ultimately indicators that line up to the same spot, the more momentum and the more, trusted that level is ultimately going to be. You're going to have some traders that are watching for the VWAP bounce. And so they're going to be entering there a percentage of the time. And then you have other traders that are looking for the pullback to the previous opening range high of the day. And they're going to be buying there as well. And when you have multiple different facets of traders that are getting involved at the same level, again, usually you're going to have some nice momentum that you can attack, and you can see volume did start increasing on this push up as well. But waiting for a red to green move and then a pullback entry has just been really profitable for me over the last 2 or 3 months. Strategies are not always going to work. They're always going to change. Certain strategies are going to be more effective than others during specific times of the year. But this has been a strategy that has been pretty consistent, at least over the last 3 months. And it's something that I've been attacking and specifically looking for every day without fail. And again, it's been a pretty profitable overall strategy for me to add to my trading arsenal here. I see a few people talking about GEVO, ECOR. Yeah, so lost money on ECOR because I didn't sell when you sold. And it's just something where, with trading, a huge part of being a successful trader, and it's something, and again, guys, this is coming from someone, like, I'm not claiming to be an expert here, but I have been trading for years and years. And so one of the most important parts, guys, is conditioning yourself to do the right things in trading. And whether you condition yourself to not take specific trades that are less favorable, or you condition yourself to exit at your right reward target that's going to be the most effective, a lot of trading is just conditioning through repetition. And so you do the right things over and over and over again until it becomes second nature and you don't have that emotional kind of toil that you're battling with. Instead, it just becomes second nature. It becomes automatic. And if you do, and that's why experience, to be honest, is such a crucial part of trading as a whole. Yeah, we have a few people talking about GameStop, and I genuinely have to take a peek here. GameStop is ripping, guys. It's up to 130s. So with that said, I'm sure AMC, another penny stock, is pushing up some as well. And yeah, AMC's back up to $9, 930s right now. So yeah, this is certainly one of the penny stocks that I'm the most interested in moving forward. But yeah, guys, I wanted to show you that specific strategy. And again, if you watch my streams every weekday, that's a strategy that I get pretty heavily involved with anytime I see it. And the reason for that is just because it's been pretty effective with my own trading. Now, the next type of strategies, and the next thing I really want you to understand about penny stocks using the VWAP, is that sometimes you need to find the stocks that have the best volume overall. Recently, I saw FRSX start to squeeze up and push up. But the reason I didn't approach this one at the opening bell is because the volume wasn't incredible. It didn't have incredible volume leading into the opening bell. But recently, you can see the volume actually pushed up, and it's starting to honestly make me a little bit more interested at this point in time. I don't know if I'm going to ultimately trade this one, but I am looking for a pullback to like 850s right here where we have some of that confirmation. But again, remember, guys, if I do take these trades, they're going to be very short term. But one of the things that drastically improved my trading is just trying to be disciplined enough and selective enough to wait for stocks that have favorable volume. With penny stocks especially, volume is king. If you want to have reliable setups, if you want to have buyers step in where you want them to step in, you need to target good volume stocks. And one of the things that drastically improved my trading is that I stopped watching for low volume stocks. What would happen with my trading, and I think one of the downfalls to many traders in their own systems, is that I would get into a few good trades with good volume. But then once I had a few green trades in the book, I would get bored, I would get impatient, I would lack discipline, and I would start pushing and poking at lower volume moves. And you can trade lower volume stocks in penny stock land, but the big thing is that if you're trading momentum like me, you have to target good volume. If the volume is not there, you have to wait for good volume. And taking no position is a position. And sometimes it's the right position, guys. And so if you're going to trade these momentum strategies that I just went over, understand one of the biggest, most important, crucial aspects of these strategies is simply waiting and being selective enough to only trade really high volume stocks in penny stocks, because that is what's ultimately going to give it the momentum. And again, when I changed that about my own style of trading, it certainly improved my results in a huge way. Let me check back up on the chat here. Well, when you consider good volume, it's going to be subjective depending on the stock, the float, all that good stuff. If we're looking at pre-market, good volume to me is anything really over 2 or 3 million. If we're looking at actual kind of movement and price action during the day, I would say anything over 200 to 300,000 shares traded per minute is good volume. And we don't necessarily mean every minute, but we need at least some time in the last 5 minutes. If we look at this volume level here, most of this is staying over 250K per minute. And so that's good volume. But again, it's going to depend on the float, the price of the stock. Smaller price stocks are going to have more volume on average just because they're more affordable. People can buy more shares, so forth and so on. But if we're looking at session wise and pre-market, I would say over 3 million is certainly what I'm looking for. You've been profitable day trading for months with VWAP as your only technical indicator. Yeah, I mean, I'm a purist in that way, consumer. I like to use the VWAP to determine a short-term trend, and then just use simple price action with support and resistance. I'm a scalper though, and so my way of trading is going to be a little bit different than everybody else's because I had to trade, and my strategies are what's suited towards my own personality. Again, I'm a very skeptical trader as a whole. And so with that, I am targeting very short-term moves, very skeptical of whether the stocks are actually going to hold or not. And I'm just targeting small slivers of momentum that I can attack and exploit with these penny stocks. To show you guys an example of why volume is important, and you can trade low volume stocks using the VWAP in penny stocks. You can take a look at a few of these that I'm about to show you. The first one here is TMBR. Now, TMBR has had some decent movement today. It looks to be a larger float. Let me catch back up here. There we go. For penny stocks, which time trends would you use? 1 hour, 4 hour? It's going to be subjective. I'm a scalper, so I'm mostly using 1 minute. But to look at TMBR here, you can see that this one has lower volume on average. Another thing to take a look at is that it's not gapping up in a huge way. The more stock gaps up, especially in penny stocks, a lot of the time is going to be extended by the time the opening bell rings. And many times stocks that actually follow specific trends the best are stocks that have not been gapping up in big crazy ways. They're less manic. They're more consistent. And if we look at TMBR, you can see what I mean here. If you look at the VWAP, again, the VWAP's telling you the short-term intraday trend. And so what it's ultimately doing is it's telling you the short-term trend of the day. TMBR has been maintaining above the VWAP. And so the VWAP here is identifying a short-term upward trend. And you can see every time TMBR pulls back to the VWAP, it's maintaining and holding that trend relatively stable, in a relatively stable way. We had this latest push up here. We're pulling back to the VWAP. And in this way, this is why the VWAP is valuable. Somebody asked me if I'm only using the VWAP, and you don't really need other indicators, at least for my own specific strategies. I don't. Because if you can identify a short-term trend like this, then you're going to have a little bit easier time trading it, obviously. To look at some other low-volume examples here, aside from TMBR, we can look at OSS. Same type of move, maintaining in a really obvious specific direction without a big crazy gap, respecting the VWAP, maintaining above it. We can look at VACQ, which I believe is a SPAC. But again, same type of thing here. Lower volume. This one actually was a gap up. And again, you can see that this one is maintaining in that specific direction over and under the VWAP that you can, exploit and take advantage of this short-term upward trend. Another one with low volume that's maintaining a nice trend is ZKIN. Same type of thing here. And so sometimes the lower volume penny stocks are better for trending, and they're better for swing trading in some ways, and they're better at identifying trends and attacking those specific trends. But again, there's two different kind of facets of day trading and penny stocks. There's trend trading, which you're going to target more so stocks like this. And then there's momentum trading, which is really what I'm doing, where you're targeting stocks like ECOR, you're targeting stocks like SOS. And those are the stocks that I basically targeted today. Again, I did try to trade AMC, but I think I lost a little bit on this one. Just a lack of patience, which is okay. But there's a few differences. And my point is that if you try to target trend trading on these big volatile parabolic movers in penny stock land, you're going to have a tough time. A lot of these are not going to maintain really obvious, specific trends that you can identify and attack. And so understand what you're trading. If you're trading longer term trend strategies, you don't need a crazy amount of volume. You just need a good trending stock that maybe has a good daily chart, good 15-minute chart, so forth and so on. If you're attacking momentum like I have been, then you need good volume and you need quick bursts that you can attack from, as well as a smaller profit target and a faster trade, in my opinion. And now this is subjective. Everybody's going to feel a little bit differently on this matter. But in the end, I want you guys to understand the differences in those two types of strategies and how you can actually take money from the market using them. Let me catch up with the chat. And yeah, guys, we can look at some of these other stocks that have been ripping up. We've got a few crazy stocks moving right now. Obviously, the first one that we're going to look at is AMC. AMC is super interesting. It's got some great movement overall. And what I'm specifically watching for AMC is I'm looking at these pre-market high levels. We have this pre-market high level at around 915, 910 right here. And, we do have a lot of confirmation from, right at the open to midday and mid-morning and pre-market till early this morning and late Friday. But these are the levels I'm watching, and you can see on AMC, it has a ton of confirmations at around $9.10. Another interesting thing is that we're actually currently pulling back to that $9.10 level. And so on a short-term basis, that's really what I'm watching with AMC. I know this one had a lot of hype about the gamma squeeze that was potentially happening today. And honestly, so far, it looks like that was accurate. We are getting a big percentage squeeze. I think AMC today is up about 20-25%. And so making pretty solid moves, maybe not 25%, maybe 15 to 20%. But again, we are having some good volume and some good momentum in AMC today. Let me know right now how you feel about this one in the chat. And are you bullish or bearish on AMC and GameStop? Let us know. I know we had a lot of AMC GameStop traders in my stream this morning, so it was certainly fun. Shout out, you put me onto Benzinga. Yeah, Benzinga is a great platform, man. Really great platform. Suggestions. GEVO. Yeah, I know GEVO moved a little bit this morning, but so far what we see here is a sideways trend. And this is actually a really good example of a neutral trending stock. So if you're using the VWAP to identify a trend of the day, if it's maintaining above the VWAP, it's in an upward short-term trend. If it's maintaining below the VWAP, it's in a downward short-term trend. And if it's doing what GEVO is doing here, it's maintaining a neutral sideways trend. If it's chopping over and under the VWAP, which you can see it is here, sometimes it's maintaining up, then down, then up, then it's basically maintaining a sideways trend. If it's not respecting the VWAP in any significant way for the most part over a longer period of time, then it's basically just a sideways trend, and we can draw out that trend and kind of identify it right around here. We can even draw it and shade it in if you guys want to see it. But yeah, GEVO for me right now is just in a sideways intraday trend. Now, that doesn't necessarily mean that it's not going to be volatile and it's not going to have any momentum. Just right now we're sideways, and we've been sideways most of the day. With GEVO, this is actually a stock I talked about yesterday on the live stream, on the Sunday show that we did yesterday. And with GEVO, again, my favorite thing about this one is the daily chart. Beautiful daily chart pulling back to a really nice, $9, $9.50 support level that was confirmed multiple times back in January, back in, early January as well. And some earlier, or some a little bit more recent back earlier in February. And so a lot of confirmations at $9 and $9.50. We are sitting right around that $10 level. And again, what it's doing today is relatively insignificant with regards to what it's going to do in the next week or two. And so we'll see what happens. But yeah, GEVO, I certainly like the daily chart, but only time will tell. You generally don't know what's really going to happen with these. Seen a few other call outs. DNN. Got you. Yeah, I mean, so with DNN, here's the issue. All right, I'm pretty sure DNN has been diluted a ton. Let me see. Yeah, so the float for DNN is 673 million. So it's a fairly large float. And the problem when a stock has been diluted like this so much is that it just kind of kills the range. It kills the volume. Not really the volume, but it kills the range and the volatility. And you can see we're barcoding here for DNN. Again, though, with lower volume and smaller volatility, you can look at it for a swing trade. And I don't think the daily chart necessarily looks bad here. For me as a day trader, am I going to day trade this thing? Absolutely not. But again, with a pullback to a whole dollar, a major whole dollar that has confirmed support and resistance, it's not terrible. But again, with these penny stocks, there is some risk that goes along with swing trading that you should understand. Although, again, the daily chart doesn't look horrible for DNN. I want to see it just maintain over a dollar. $1 is such a big psychological level with especially stocks that are this cheap that I know $1 is really the level that everyone else is watching. We have been holding over it for the most part, except for a few small dips over the last week or so with market trading. But again, I want to see this one hold out one, move up to 125, and then maybe start to get some more volume coming in. Again, the float's going to be an issue just because it's so diluted. But at the same time, the daily chart's not terrible, so we'll see what happens with that one. Looking at a few other suggestions here. AMC, yeah. I mean, we're certainly looking at AMC, but I'm not going to we already kind of talked about this one. And again, the level I'm specifically looking at for AMC is right there at around 910. And we'll see what happens. I'm curious to see what's going to happen with this one. With GameStop, I was a notorious bear at $4 for GameStop. And so what these meme stocks are really going to do, I would love to act like I know, but I certainly don't. And only time will tell. If I could find some momentum to get into, I've kind of been sold on these a little bit. So we'll see. We'll see what happens later on today in Power Hour. Yeah, I'm curious and excited to see what's going to happen there. SENS. All right, I'll look at one more, and then we'll go ahead and close it down. Now, again, with SENS, it's another one of those stocks that I believe has a big float. Let me see. It's not incredibly large. It's 85 million in the float for SENS here, which, isn't terribly huge or anything like that. It's not crazy big, but the volume has certainly died down a little bit with SENS. And again, when the volume's like this for me as a day trader, I'm certainly not going to trade it or at least day trade it. But we kind of pivot to the longer term view of this one. Right now, I think the real battle that's going on right now for SENS is it holding over 350. I think 350 is a big $0.50 confirmed level historically on the daily chart. And we just now broke underneath that. We're currently at 347s. And so the daily chart doesn't look bad. It's not a horrible daily chart by any means, but it does have some ground that it needs to make up and hold over 350s, maybe test $4. And with that, we're just going to need some buyers to step in here, which again, the range is tightening up. So, who knows when that's ultimately going to be. Very small range on the day. And only time's going to tell with that one. But with that said, guys, hey, thank you, Internet. I appreciate it. Appreciate all the love and support, guys. Again, you can check out my YouTube channel. We day trade live for free every weekday morning on there. Let me find the link and I'll post it really quickly. And then we're going to go ahead and get out of here. So, hey, listen, y'all have a good rest of your day. Good luck in the market, guys. Remember, take it slow. Wait for A+ setups, and you will do well in the market if you just limit yourself. Focus on getting into the best trades possible. If you're new to trading, remember there's nothing wrong with trading small and paper trading, and then definitely trading with smaller share size in the beginning. It's all about conditioning through repetition. So just get that experience in. Good luck, and we'll see you guys next time. I'm going to post my YouTube channel in the comments section. Y'all go subscribe to me as well. I certainly appreciate it. And yeah, we day trade live every weekday right there for free on YouTube. Here's the link. Good luck. Y'all remember to hit those like and subscribe numbers for Benzinga as well. Great resource at Benzinga. Benzinga puts out a lot of free content that a ton of other people charge for. Just a great resource at Benzinga. So y'all hit that subscribe button here. Hit that like button. Show support for the stream and the channel as a whole. And we'll see you guys tomorrow. Have a good day, guys. We'll see you guys later.